Hello, I'm Kevin Victor, founder and managing editor of Investors Mag. As you are aware, the COVID-19 pandemic constitutes an unprecedented challenge with severe socio-economic consequences for Mauritius. Investors Mag has interviewed local financial and economic actors to help have a better understanding of the current situation and the way forward for the country. Our guest today is Sanjiv Bhasin, the CEO of AfrAsia Bank Mauritius. Thank you, Sanjiv, for accepting Investors Mag's invitation.
Hi, Kevin. Thanks for having me on this show.
Can you tell us what is your outlook on the global economy amid the COVID-19 pandemic?
Over the last few weeks, and I would say maybe a month or so, there has been a lot of research which has been done by various institutions, both global, international, and local, in an attempt to assess what is going to be the impact on the global economy collectively of this pandemic. All estimates and all research which has been published have maintained that there would be a dramatic fall in output levels, in consumer spending, and therefore the impact on GDP globally would be quite significant. It is roughly estimated that the world GDP growth, that means the combined growth of all the countries, is likely to be close to zero or maybe slightly negative. This is what the estimates are stating at the moment. Things could get a little worse or a little better. A little worse if the lockdown in the various economies was to be extended, because the track record of medical safety and health safety are not providing the confidence to the people and the government there. They could also improve because some economies have the resilience to readjust, regroup, retool, and get to work much sooner than the others. And that will also have to be witnessed. There is also a tendency to compare this pandemic and the impact on the economy with the 2008 and 2009 crisis which hit the financial services sector. I must, however, warn that a comparison may not be either correct or in any manner revealing as to how things will shape up after this pandemic. And the reason why I say that, in 2008 and 2009, the crisis was restricted within the financial services industry. It was the banks and the financial participants in that larger industry grouping which took a hit on their capital, on their assets, on the quality of the assets and the size of provisions. They required a large-scale recapitalizing. It also required the government to step in and announce large stimulus packages and reboot the economy, if that would be a right word to describe that. So by and large, the damage was restricted or contained within the financial services sector, and the stimulus packages were designed to recapitalize the sector, bring about more meaningful controls over the activities of the financial services industry, and reduce the damage from spreading to other parts of the economy.
Thanks, Sanjiv, for those insights. According to you, how is this crisis going to impact cross-border investment into the Mauritius IFC?
I would like to take this question into two parts. The first section is related to the manner in which the country has responded to this virus and this epidemic from a health standpoint. The second part is the economic impact of this epidemic in this country and the manner in which it is likely to be managed, and some of the packages which have been announced for the businesses and the industry here to get over this adverse impact consequent to this virus. From a health standpoint of view, the response of the government has been extremely good. In my opinion, they have been able to get this virus or get this epidemic in control, and the lockdown has been extremely effective. The population at large has respected the lockdown and facilitated the government to bring this epidemic in control as soon as possible. The Ministry of Health and the health officials and the doctors and all other people associated in controlling this virus, and thereby also restrict the possible economic damage to the various business activities and the GDP contributors to the growth and the financial strength of the economy. That said, Mauritius has always been a respected and a well-established offshore financial center. It has been used to receive capital and structure the manner in which it flows out from here for investment into Africa and in parts of Asia. This has been largely driven also by the fact that there are a number of double taxation agreements and also investment protection agreements, which makes this a center of choice when institutional investors are looking for opportunities to be investing or taking an equity position in Africa and the Asian countries. In this market, asset pricing or equity pricing might open fresh opportunities for investors who are wanting to take a position in Africa. So overall, I would say that this is likely to have a positive impact vis-a-vis the status of Mauritius as an offshore financial center, and therefore cross-border investment flows in and from this jurisdiction is bound to increase over a period of time. And I think that this part of the financial services activity in this country is bound to benefit from this epidemic rather than lose its status in the coming few months and years as we move forward. Needless to say that this is also helped by having a proactive and a participant regulators who understand the business and are also making sure that this business is protected and remains on the path of growth always.